All right, so officially welcome to everyone who's here live. Great turnout today. And for anyone watching on the recording as well, you might have already heard that we got a special session today. So I've invited the legendary Nick Peterson to come on the session today. And we're going to be talking about some perspectives on higher level frameworks and strategies within the decentralized fitness ecosystem. We often talk about framework, strategy, tactic, tool, and most of the time, especially for the sake of learning and growing and implementing, we do spend time on tactics and tools. Nothing wrong with that. It's just that the tactics and tools are always informed and shaped by the higher level frameworks and strategies that kind of govern and assist us in everything else that we do. And so, just for those of you who have not yet had the pleasure of meeting Nick in person or virtually, I've known Nick for a little over 6 years now, and initially stumbled upon him in my journeys in the online coaching and marketing space, and immediately knew from the first course that I bought from him, immediately knew this guy's legit. He's one of the good ones because I'm sure you've been, or if you've been around the internet for any number of time, any number of years or even a few days, you know that there can be a lot of sketchy and shady stuff out there. But that being said, there is a small pocket of very high level integrists and just really phenomenal people out there who are doing good work. And then through the years, I continue to follow him, and eventually we both similar-ish timing started getting into crypto investing, and this was probably more like 4 or 5-ish years ago. And then I started following the teaching that he was putting out and the content around higher level frameworks and strategies, specifically related to crypto investing, yield farming, some of these other tactics that are out there. And basically, in a nutshell, everything that he taught, I integrated into what I was doing. And eventually, it became what I started teaching in the mastermind when I launched this group in February of 22. Now, since that time, things actually have evolved a little bit. We've added some more advanced stuff and some more profitable things here and there along the way. But anyway, just wanted to acknowledge that his research and his efforts in this space really formed the foundation of everything else that we do here in the mastermind. So me personally, I'm infinitely grateful to him for creating those systems and those frameworks. And we've been talking a little bit about, especially lately, some things that are happening in DeFi in general. And of course, also Nick is the founder of the Guard token, the Guardian Academy, the Guard Foundation, which we might touch on that a little bit today. I'm not sure, but there's a lot of cool stuff happening there. And what I've always admired the most about how Nick approaches crypto is that it's really about the intersection of Web 2 and Web 3, meaning there's a lot of really great real world things happening, and we can integrate this new technology, blockchain technology, Web3 technology, call it what you will. We can integrate that with what we're doing. So it's not this separate thing that like exists out of cyberspace and doesn't influence our actual lives. It's a new technology and a new tool that we can integrate. So, Nick, did I did I hit everything? Does that give everyone a pretty clear picture of who you are and what you do?
I mean, I think so. I appreciate it and appreciate you as well. So you covered kind of the clarity hierarchy well, uh, principles, strategies, tactics, tools, and I can say that we explored some of the options years ago, and since then, so many new tools have popped up, and like a lot of the things that nobody had ever heard of when we were trying to teach it have become more commonplace and more understood. So it's really people like you that keep on top of the strategies, which are a little more evergreen, but the tactics and tools are changing constantly. And so you and Greg and the rest of the team staying on top of it is more helpful to more people than I could ever be, because I don't live at the tactic and tool level, but it's incredibly important. So I think it's awesome what you're doing. And check this out if you guys want to. I am connected to Starlink, and I may drop, but this is what I'm looking at right now, fully off grid here. Uh,
Nice. And is that the mountain that you guys usually climb with Master Mike?
no, this is that's about 3 miles down the road. This is an off grid. Nobody knows where this is. However, I know you just because we talked about it. And as a pack, not a charity. Tragically.
Sorry about that. I got him muted.
Oh, you're all right. So anybody, if anybody here, especially in the new mastermind level that you deployed, which I'm looking forward to talking to everybody on Wednesday. You guys find yourself in Arizona, let me know. If you're in Brandon's world, you can come hang out. It's peaceful. And I find that personally, I live really well at two extremes. You got the crypto degen sitting in front of the screen, pushing buttons. And then like we're out here where there's like nothing digital except for this phone I'm holding. And so it makes a really good balance. So if you I strongly recommend those of you that are farming all day and take a couple days and like get out, get away. Your whatever your farming will be fine. Oh, yeah. How can I be the most helpful,
Yeah,
useful,
well,
or
I
interesting?
was thinking a cool place to start would be if you could walk us through some observations that you've made over the last, let's say, 4-ish years about trends in human behavior. And, we often talk about kind of like the irrationality of human behavior and some of the silly things that humans do. Um, we kind of live by that mantra that like, hey, you want to be a better investor. Part of that is becoming a better person. And part of becoming a better person is realizing those gaps that may exist in our thought processes. So
Mm-hmm.
I was wondering if maybe you could just talk about some observations you've made because you've worked with probably thousands of people, investors, entrepreneurs, and folks that are similar to who's in this room that you've seen throughout the years. And maybe it's silly behaviors that have derailed people, and maybe it's wiser behaviors that have kept people on track.
Sure. I'm just going to rattle them off, and if anything's particularly interesting, you guys can let me know. And this is just my observation, so small sample size, limited to my, the circles that I'm in. So it's certainly not an absolute. Uh, Again, just my observation is you get a bunch of things. You get one, not from a place of judgment, which it may sound like, but from a place of truly trying to help people. There's a lot of delusion. uh, People we've all seen it. People that think they're really skilled at something when they're clearly not. And it goes the other way. There's people that are incredibly skilled and they think they're not. We see it both ways where it's like, how do you not realize how gifted you are? And then the other end of it is like, how do you think you're gifted? Because clearly you're not. And so there's a little bit of delusion about ourselves, myself included. It's like a never ending battle to break through that delusion. And delusion dies in the field if you let it. So whatever you think about, using crypto as an example, and you've been in fitness as well, right? Whatever you think about fitness, you read all the boards, like, cool, go try it. And you're going to learn real quick that everything you thought is not how it actually works. And so everybody here is engaging the field. You're pushing the buttons, you're farming, you understand how it should work, but then it works a little bit different for you. And maybe it's luck, timing, randomness, who knows? So the first is, especially with crypto, because there's so much attention, is you have a lot of people that have a lot of opinions that have never done it. And that's a very human thing, but anytime something is popular, uh, uh, there's a risk there. There's a risk that, Joe Blow, internet marketers, teaching all about crypto, and they've never done well in crypto. So there's some delusion there, and it's really tough to sort through. And so, one, delusion about yourself, and then two, delusion about the game that you're playing. People often say things like, man, if I would have bought Bitcoin at $1, I wish I was early. And they fail to realize that no, if you bought Bitcoin at $1, you would have shit yourself when it went to $4, panicked when it went to two, and sold it. So you don't wish you bought it. Like, so thinking that if you bought Bitcoin at $1 that you would be rich is delusional. And you can tell because the very thought process, I wish I did this, means you didn't. It's not you. You are not an early adopter. You don't have the stomach to be early and handle the vicissitudes, and that's okay. Because the people that are early suffer the most pain. So it's kind of like an honesty about where do you fall in this? You know, are you high, super risk tolerant, early adopter, looking for asymmetry, or are you a little more conservative? And you can win either way. What Brandon, what you teach has a range, but you can be very conservative, relatively speaking, and still do much better than the other options you have as a conservative investor. And so it's just like being honest with your personality and being okay with it and building a strategy around it and not hoping or trying to be something you're not. Because again, if you get into a coin as an example and you're not farming, you're just holding and hoping it goes up. The first 100x can be brutal. It could take 4 years. It goes up, it goes down, it goes up, and you think you lose it all, and then it runs up again. But you're on vacation, so you miss the peak, and it can be brutal. And that last 10x, so you go 100x and 10x is 1000x. That last 10x is typically a much smoother ride. So for many people, that's actually a better investment because it doesn't take years off their life. You know, so it's like just understanding those things and being honest about it and knowing the game you're playing in the sense of, okay, so this has tremendous asymmetry. I'll give you an example. I think you know Timothy Dick.
Yeah.
So Tim's one of my dearest friends, and we share an office in California. And I walk in, he's got a stack of papers. I was like, "What are those?" So these are my K1s. He was an angel investor in 43 companies at the time. And I was like, "Holy shit, dude! How much money are you making?" And he just kind of laughed. And he's like, the hope is that in my lifetime, one of these has a liquidation event. Right? Like that's a different game, which means he expects 42 of them to lose and one to have a huge unicorn exit. Since then, two of them did. So he made FU money twice. But you see, it's like you gotta understand if you play that game, you have to make small enough investments that you can make many of them. And you want 1 in 40 to win. So if you do it once or twice, you're like, fuck this, I give up, then that's not you. That's not your game. So if you want thousands of multiples, the game is to make smaller bets more times. Uh, and if you think to yourself, oh, what if I put $10 in, it could turn into 10,000. But that means if I put $1,000 in, it could turn into 100,000 or whatever. You know, and what happens is the benefit of the asymmetry to the upside is that you don't have to invest as much. So the more you invest in those things that are designed to have huge, huge, huge upside, the the more you're diminishing the actual benefit of the thing. Right? That the whole benefit is you don't need that much. So putting a whole bunch in to a single coin, hoping it's a moonshot, is not a good strategy. And so there's a disconnect between the way you're behaving and your expectations and the strategy you're deploying. Uh,
Yeah, and
so those are
if I could just jump in here real quick because I resonate with this so much. I was definitely when I first got into crypto, I was the delusional one because I wanted to think that I was like this super smart, savvy investor. Meanwhile, I was doing exactly what you were describing. Like I'm chasing the crazy whatever moonshot coins. And I was definitely operating in that all or nothing mentality. Like I'm gonna dump it all into Papa Shiba. I'm gonna dump it all into Floki. And in retrospect, I'm like, well, I got lucky a few times, but I realized, of course, after I got lucky, like that's actually not a long-term strategy. And that's when things really started to shift for me.
Yeah, and the truth is, uh, when Microsoft IPO'd, I think it was privately held for like 11 years. So that means there's 11 years of data. There's 11 years of leadership. There's products, P&Ls. You see computers on other people's desks. Like there are things you can look at to be a discerning investor. Blockchain projects do not have that yet. Outside of you can make a strong case for Bitcoin. Um, Still speculative. You can make a strong case for Ethereum since at this point all the layer two settle on it, but that will probably change. Uh, so yeah, the biggest delusion is thinking that you're a sophisticated crypto investor. That does not exist. If you're just buying coins now, farming is sophisticated. It's very smart. It's saying, okay, uh, we're just going to make money on everybody else participating in this thing.
Hmm.
Like that's a more sophisticated strategy than buy coin and hope it goes up. Uh, of course, there's the sophisticated investor. The way I'm saying it can look at you know different companies. If we're talking about the S&P or stock market, and they do their diligence, how they do their diligence. That again, that doesn't exist in crypto. There's not really a way nothing has had enough utility long enough to have like a fundamental framework to determine even what a fair market value is. And that's okay. So the benefits, if you're just talking about buy coin, hold coin, um, the benefits are in they're reserved for people that truly are early adopter by nature, meaning they can read between the lines. They're probably well connected. They probably have an idea of what's going on and understand it, and they have the capacity to understand it before it's obvious to everyone else. That's what makes them early investors.
Hmm.
And so there are certainly advantages in crypto, whether that's the strategy. I think farming is like trading fees, arbitrage, things like that are the smartest way to play the game right now. Uh, and there's certainly tokens worth acquiring based on your macro belief. But it's probably not going to come from white papers and Telegram groups. Like how many people here can actually, and I've seen some people that proclaim themselves to be crypto geniuses, and it's like, cool. So why'd you invest in this? Well, they're white paper. Like, okay, I'll just pull up the white paper and say, tell me exactly what this means. This paragraph right here, and they have no idea. So no, you are not a sophisticated investor buying off this white paper that is actually a sales letter. Because you can't tell me what it means. You have no idea. You just know that it sounds good, and that's fine. That's how you invest. So again, more delusion. Uh, I think the wisest thing is uh, the flip side of that is the people that understand that they practice restraint, where it's like, okay, I'm. It's okay if you miss something. Like I watch people have done the best, and it's like, oh, yeah. You say, hey, did you invest in this thing? It went a gazillion X. They say no. It's like, oh man, that sucks. They're like, no, it's fine. There's more coming. It's just that understanding that, like, if I'm actually good at this and crypto is actually going to be what I think it is, then it doesn't matter that I missed this coin because there's 1,000 more of them coming. Tomorrow, there's 1,000 more coming. So that's the superpower that I've discovered there that I've observed in others is it's just like, it's okay. Like, for many things, it's like best time to plant a tree was 20 years ago. Second best times right now. And I do believe that's true for crypto. However, the planting the tree is not getting a moonshot right now. It's getting involved paper trading. If you have to paper trade, like just start understanding what's going on. And it's okay if you're paper trading something and it goes a gazillion X. It's the ability to not beat yourself up about, oh man, I could have invested that and I missed it. Because if you do that, it'll be very hard to make good decisions in the future. Like you have PTSD over the thing you missed and you jump into everything. So I think restraint is the characteristic that's been the most useful. And the the other one is what we call the adaptive dilemma. This is the other big one is there is a lot of playing the victim in everything. But when you get into finance, people get really crazy. Like they lose all logic when it comes to basically sex and money are like the two things that people just. You ever watch a married couple and they're arguing? You're like, what the hell are you even arguing about? It's like it's not logical. It's just logic goes out the window when these things are going on. Uh, so adaptive dilemma is like on many levels, people are expecting decentralized for them. Like the upside is decentralized. If I make a whole bunch of money, I shouldn't pay taxes on it, and nobody else should access it, and we shouldn't pay fees because it's my money. But also, if something does go wrong, there should be customer support, and somebody should refund me, and I should be protected. It's like that doesn't work. Like, how are you paying these customer support people if there's no fees? And so there's just a huge disconnect in reality and expectation. And like getting clear on that is like, look, I under banks are a pain in the ass. I hate banks and they have fees and stuff. But also, I can call someone and they provide support and they're licensed and credentialed to do so. So that's the trade off. That's the biggest issue I see in crypto amongst most people is they don't want to acknowledge the trade off. They get mad, and I've been on the other side of this. Uh, they want most of people like they want to make sure that leadership and team is not making any money, but also that leadership and team is showing up every day full time to make sure that they make money. Like what the fuck? How does that even work? So there's like I want everything decentralized as long as things are going my way. But if I make a bad decision, then I really hope there's a centralized infrastructure to protect me. Like, cool, uh, pick one, no judgment. But so that gets people in a lot of trouble when they're just not aware of that trade off. They're not willing to acknowledge it or make it. So those are probably the big ones.
Yeah, and it makes me think, speaking of delusion and potentially irrational behavioral patterns, I know that especially in the world of farming, APR often comes into play, and there's a temptation to chase like the wacky APRs in the same way that a person might chase silly random meme coins.
Yeah,
Was wondering if you could also provide some observations that you've seen in the past about, people, maybe it's when they first get introduced to farming, and then because I was guilty of this too, I would immediately just look for high APR, and that was the only variable that I considered.
yeah.
Obviously, there's way more
So
too.
I'll explain real quick why that doesn't work, and why we're so susceptible to it. Is one, the blockchain. You can go. I'm sure many people here can go and read all these smart contracts. So you can figure it out pretty quickly. The blockchain are so our brains are wired in money over time. APR is dollars over time, right? APY over a year, whatever. So we think dollars over time. Simultaneously, most people in crypto also claim that they hate the US dollar because it's blah, 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 blah. And yet they're processing everything in dollars over time. So you already have like a little bit of a disconnect where the decision making is going to, reality will not meet expectation because you're just not rewiring you have to rewire your expectations and your brain simultaneously. You can't have one on one operating system and the other on the other operating system and expect them to uh, communicate well. So that's the first thing. So we're thinking dollars over time, and that's what we're when we get into yield farming and stuff. Most of the time, we want more dollars. It makes sense. So first, just be honest. You don't hate the dollar. You want more of them. That's the reality, or you wouldn't be measuring everything in how many dollars you made. So one is that. Two is the blockchain is not programmed in dollars over time. It is programmed assets per block, and the block times change. There's an average. You can Google the average block time for Ethereum or whatever, but they're different. You might have a 4-second block and then a 2-second block. So all of these emissions on chain are like, you know, 0.001 ETH per block. And in real time, the user interface you're looking at, whatever tool it is just trying to back calculate that and give you a US dollar value. So it's not like you put dollars in and you get dollars out. You put one Bitcoin in and you get, one whatever Satoshis per block. And at this very moment in time, if nothing changed, this is the APR you would get. So that's the first thing to understand. Now, using something that might be easier to understand, if I have a house, I pay $1 million to buy a house, and the person paying rent, so it's $1 million house. The person paying rent pays me $1 million a year, which is absurd, but easy math. Okay. So what am I getting on my money? 100%. That's pretty easy. Now, if the price of my house went down to $500,000, the value of the house right now went down to $500,000, and my renter still paid me $1 million, the APR just went to 200%. Woohoo! Except I'm worth a lot less money. Right? Now, if my rent went, if my renter, let's say my house went down to $250,000 in value, and my renter only paid me $500,000 a year, I'm still have a higher APR, even though I'm making less money year over year, and my house is worth less. I'm fucked. So what happens, and this is what happens, the UI that you're reading all the time is not reflecting the money you put in. It's not reflecting the APR you're going to get. It's just saying at this time, the house is worth 250. So Bitcoin is worth this. The emissions are worth this. So when you chase high APR, you're almost always chasing a base asset, in this case, like the house, that is getting cheaper and cheaper and cheaper. So the APR is going up. Does that make sense? So you get like, it'd be better. Now, let me flip that. This house is worth $1 million, and I'm getting $1 million a year in rent. And then one day, there's an announcement, they're putting an airport somewhere, and my house goes up to $10 million in value. I'm still getting paid $1 million. So my APR just went down to 10%. So you see how you look at it and go, oh no, I got to get out of this. Like, wait, hold on. You just 10x'd your net worth overnight. And you consider that a bad thing? Yes, because you don't know what you're looking at, right? So generally, if you're chasing APRs, not always, but it's helpful. Is this because again, in this example, if the value of this house went down every single day, and the emissions, the rent also went down, but it went down slower than the value of the house, the UI, if we had a crypto UI on it, it would show that the APR keeps going up. And I'm losing money the whole time. As APR goes up, I'm losing money. And so hopefully that made sense. But that's the problem with APR chasing, is you are not putting in dollars and getting out dollars. You're putting in one asset and getting out that asset or other assets. They're fluctuating all the time. And the programs are not, the apps, the protocols are not programmed for dollars over time. They're programmed for assets over block. So the US dollar value in the APR is extremely misleading if you don't have a tool to measure it properly. And the way to measure it properly is what it is worth, how much did I put in, and what is that worth now? And you will get a different answer than whatever the UI shows you, because that's in flux all the time. And all we care about is how much money we've made on our money. And so it's just you got to measure it differently. And when you start doing that, you'll start seeing that most of the things that have absurdly high APR, it's because the base. There's two reasons something has absurdly high APR farming. I mean, there could be many, but there's two main. One is extraordinary amount of volume. The other is the base asset, the asset that you would stake or provide liquidity, is going down precipitously, making the APR, the return, seem really, really high.
Yeah, we encounter this in the mastermind very frequently, where people see these high APRs, and it's either one of those variables, or sometimes it's just a pool with really low TVL. And so the two people in the pool are making all the trading fees. And we got to go, oh, slow down. Like, let's look at the TVL. Let's look at the trade volume. If there's only, 20 grand in TVL in this pool, that might not be a reliable pool, especially with a V3 type of situation. That might not be a reliable pool to get into. Instead, let's slow down, come back to first principles, which is steady, reliable assets first and foremost. And then let's take a look at our target range. And you guys who have been here a while know, I keep telling you, just look for 50 to 100% on your APR. If it goes above that, great bonus. But as long as you can land in that 50 to 100% APR range, if you think about it, you're still crushing it on total returns. And you're able to get into pools like Sol USDC, and you can spread that range out so far and still land at like a 70, 80% APR and still be able to operate on the probabilities, not certainties principle, meaning, hey, I don't know what Sol is going to do or ETH or whatever asset in the short term, but if I set myself up to incrementally gain, regardless of the short term price action, now I'm in the driver's seat. So instead of chasing like maximum possible upside or 800% APR, I pull it back and play the slow and steady game of incremental gains.
Yeah, and just to build on that a little bit, remember, and I'm going to use really simple. If I stake just Bitcoin, so not farming, or I do Bitcoin ETH, whatever, and it's paying me out in USDC. If Bitcoin and ETH skyrocket, I will get paid the same in USDC, same asset per block. And my net worth has skyrocketed because of the Bitcoin and ETH. But the APR could go down to like 1%. And I've seen people like, oh no, this sucks, and leave that situation because they just don't comprehend what's going on. It's like, no, this is good. Like this is, but the APR is going down. Like the UI says the APR is going down, but you as an individual, your return is grown exponential. But there's just no way right now because humans cannot process things in assets per block. Like I was like, hey, look, you leave me your 2 trucks here, and I'll give you 3 watches per hour. It's like, okay, that's not an easy thing. Okay, what's the value? Like our brains don't process one asset or 2 assets in a different or the same assets even out, which is what the blockchain is doing. And so there has to be some way for us to engage. So they create all of these user interfaces, and they're trying to help. It's like, yeah, like it does the math for you, converts it to dollar. I think Crystal and a couple others actually do have some calculator that calculate your profit, which is awesome.
Yeah.
But that's the key is there's just not the humans participating in crypto are not prepared to do those conversions at all. So you can't show them a user interface that just shows assets per block. If it said 0.000001 Bitcoin per block, you don't know what that means. So they do all the math for you, but it's misleading. And so it's like nobody's fault. It's just understanding that that's where we're at in in this tech right now is there's no easy way to create a user interface that all of you could use that and also understand. And like, cool, that's where we're at. If we want to participate, we must coexist with that reality. And that will change over time. Like people will find new and innovative ways to display what's going on.
Yeah.
I think it's important that we know that's happening.
Yeah, critical. And to kind of switch gears just a little bit because I want to be mindful of the time here. I was wondering if you might be willing to share maybe a little bit about Guard specifically, since you're very close to it. I know there were some updates recently. I'm not sure how much you're sharing publicly at this stage. But maybe any insight you can offer into that. And also like the integration, what I feel is like one of the most important things, the integration of the Guard Foundation itself, and how, it's kind of that navigating the space between Web 2 and Web 3. I mean, I'm a little bit biased, but of course, I'm of the mind that the governance utility of Guard long term is going to be far more valuable than anything the chart says. But I don't know if that's a general consensus or just me. But anyway, any insight you could share on Guard Foundation and Guard and some of the things that are happening over there?
Yeah, a little bit. I'll be able to share more as things get finalized. And there's a lot of really cool stuff going on in the crypto space. There's a chain. It'll probably be 9 or 10 months till it's live that I think will be the chain, like
Mm,
layer 0, layer 1. So it's like Amazon Web Service and Ethereum. So it's both the because I don't know if you guys know this, but like almost all of Ethereum, like 90 something percent of Ethereum's hosted on Amazon Web Service. So as much as you think something's decentralized, it's hosted on Amazon Web Service, which is very clearly not decentralized. So the whole decentralized thing is a myth, by the way. But Oko is actually a decentralized internet, which could host a truly decentralized platform. Uh, so they brought me on board, and part of the stipulation was, they carve out a whole space on their network for Guard and the Guard Foundation.
mm.
But that's 9 or 10 months away. So that's cool, and that's kind of where like I think there is potential for the real world and blockchain to blend together in a way that the blockchain becomes invisible, and that's what good tech is. I think all of you probably know that. It's like if you have to say, "Oh, it's a really good blockchain game," that means it's a shitty game, but we should forgive it because it's on the blockchain, right? So the idea is to say this is a great game, and everybody loves the game. Nobody cares if it's on the blockchain, if it's built with Unreal 5. Nobody cares. So we're sort of phase where you just have to tell people, well, it's tokenized assets on the blockchain. It's like, okay, uh, that means it's clunky, and you want me to think it's good for the blockchain, but the blockchain should be invisible. And so we're spending a lot of time with Star Edge, might be live next week. Deep Green X, like we're spending a lot of time with projects that are doing that. They're making the blockchain invisible. So Deep Green X, Star Edge, they're going to tokenize all kinds of stuff, data centers, energy credits, green energy credits, et cetera, et cetera. That'll all be on the blockchain, but the end user that's actually like interfacing with it will have no idea it's happening on the blockchain. So we're trying to spend a lot of time with that, and all the agreements and deals are for me to help, but it's really on behalf of the Guard Foundation, and this is what the Guard Foundation's about. And we're hoping that that does create a higher demand for governance power.
Yeah.
Like that's so. That said, this administration and some of the stuff that we've done, we now see how to properly have a decentralized organization, an actual legal entity in the U.S. So part of that process is getting the Guard Foundation, which was set up in the Cayman Islands, because 3 years ago, at the time, the Caymans was the only place that actually had an infrastructure, licensure, and service providers to run a DAO legally above board with the legal protection and all that stuff. The U.S. does now, and there's still not a lot of service providers. Like, are you licensed to run a DAO? Well, that licensure doesn't really exist yet here. So there's some of that. but we're in the process of moving the Guard Foundation from the Caymans to the U.S. And that would give the community a lot more control, partially because the Caymans is very, very robust in how they build things. So it's very expensive and slow and bureaucratic to do everything above board in the Cayman. So the Guard Foundation is getting moved back to the U.S., where we will have some freedom. We do have relationships with Alex Lightman and the Trump family and all that, and have been. You guys will see it, I'm sure. Brandon, you'll definitely see it. We're in talks with the Trump family and administration quite often about two projects we're doing. Uh, so it's just like, okay, how do we get this guard back into the U.S., get everything situated, all the legal, the documentation, all that stuff, and then forge forward and integrate with these projects that are doing things with the blockchain that benefit the rest of humanity. Uh, Sergey, I think you've met Sergey, right? We're going to integrate Guard into his My7 and Good Nation, his project. So it's really that's kind of the game right now is can we get it back in the U.S. and settled, and then integrate with these other projects that are doing really really big things, and then the hope would be that through governance, the foundation treasury, the treasury should grow. We have mechanisms to get donations and grow the treasury outside of liquidating Guard. The goal is always to not have to liquidate the token. And I don't know when, it may be a year down the road, have a sufficient treasury to grant meaningful grants and scholarships to people that want to build things that are useful, whether they're blockchain or not. To be honest, it's really up to the community. It's driven by vote. But me personally, I don't really care. Like if you're gonna do something that's good for the world, and it's like, wow, this is like you can actually do this. I personally don't care if it integrates the blockchain or not. And I think it's silly to say, hey, we're a foundation and we're meant to do good, but only under these conditions if you use these tech or this tech like that. So, but that's a community call. I don't control that. So my focus will be bringing these things to the table, laying it out, risks and probabilities, give it the highest probability of having a treasury that is significant and appealing to attract, these companies like Oko. They came to me, Star Edge. I would prefer that they don't come to me. Instead, the foundation builds a reputation where these people that have great ideas and a little bit of funding and a lot of technical background come to the foundation and say, hey, look, here's this incredible thing. Here's proof that we know how to build it. We just need a little bit of money. So that's kind of the year out vision of that. And then we have BlackRock trying to buy one of our patents. My partner John, some of you know John. John told him to fuck right off. But that patent will actually the process is we ended up we're in talks right now, waiting to sign the deal with a payment processor who is putting a couple million in, and they want to build it. Long story short, it is the only way to obfuscate payments legally, meaning and you can buy cannabis. It's the only way. Like we own the only way you can buy cannabis with a debit card or credit card, but you can also buy anything anonymously and legally. And the company name and the patent name is actually Guard ID, and so that process does have to run through crypto, and it will run through Guard, and that will increase volume. It's not going to buy like shit ton of Guard. I don't know if it'll increase price or not, but that would be good for farmers. Having if we can get billions of dollars of transactions processed and they run through Guard for a moment, which is necessary. It actually has to go through Guard, has to buy and sell Guard immediately, so that it's not considered a bank. So like that kind of stuff, and I think it's cool. I think it's great because that kind of volume makes it appealing for people like you guys that are farmers, which brings more liquidity, which makes it even safer. And there's kind of a flywheel there, and as it gets safer and safer and safer, it hopefully attracts more people. If nothing else, just to see what's going on and participate in the governance and dictate how the money is distributed. So that's where it's at. I'll have more updates. I'm just waiting on, just got it back into the U.S. as an entity, and now it's like, okay, how there's like a training, like how do you run in the U.S. legally? How do you file this paperwork? How do you uh, what licensure is necessary for somebody to take on the position of a manager, which would be our next hire. So there's probably a week or two of really understanding all that before there's a lot of public activity.
Yeah. Yeah, I remember this was a while ago when you first started telling me about some of these other projects that were emerging, some of the other kinds of things that were going to be integrated with Guard and the Guard Foundation. And I remember the first time I heard it, it was just like, I don't want to say mind blown, more like mind expansion. Like I hadn't even considered the sheer magnitude of the possibilities with this kind of stuff. And now that I've been closer to this world for longer, I can fully acknowledge like, holy cow, like this is very unique. This is special. It's very different than most of what's out there today. And I'm sure many people listening to this just now are like, wait, what? I mean, that makes sense, but it doesn't make sense. And I just want to acknowledge and say, like, hey, that's okay. If this is the first time you're exposed to these types of ideas and this way of thinking, it can be like a little bit jarring where you go, oh, but I thought crypto was just this. And then you realize, yes, it is that. And also, there's all this other like cool integration happening in the background that even over the course of the next 10 years, most people will not be aware of it. But simply by virtue of the fact that you're in a group like this and connecting with people like Nick, you'll be on the leading edge of whatever becomes the next iteration of decentralized finance, of Web 2, Web 3 integration, and seeing how these new technologies and things move forward. I think I got a chat message here. Oh, Dennis just said that's right. Yes. um, so that being said, it reminded me one of the events I went to a few years back, Grey Wolf Summit, was the event that I first got introduced to Avanti 3, which some of you know that's Evan and his company. And at the time, I didn't really even fully understand what Avanti 3 was. I only understood, oh, they're innovating partially through the use of blockchain technology. They're innovating distribution channels for artists and entertainers. And I'm like, that in and of itself is such a compelling idea to me. I want to stay closer to that. So this is kind of like the quick 15-second plug for Grey Wolf Summit coming up in November. Those of you who are already in the inner circle, you'll have access to that for sure, among other things. Anyone else who wants to explore that option with me, Inner Circle Grey Wolf Summit, other live events with Nick and some of these other people that he's talking about, you can just reach out to me directly, Success Finder, cell phone, email, whatever, and we can talk a little bit more about that for sure. All right. Like I said, I want to be respectful of the time. We are scheduled to end at the top of the hour, so we have 5 minutes. If anyone has like a specific question that they want to ask Nick, go ahead and just drop that in the chat. If there's no questions, we'll just end where we're at right now. Otherwise, it's just like kind of a nice time to interact a little bit and jam with Nick while we got him on.
Well, I we'll see if there's any chats, but I got to jump anyway. And I
Oh, cool. Okay.
appreciate, yeah,
We'll
appreciate
wrap
you
it up here then.
guys.
That's a good stopping point.
And I think Wednesday we're talking. We'll hang out with Inner Circle people. So looking forward to that. Oh,
Yep.
what was the name and spelling of that ETH/network? Just to clarify, it's not ETH. Okopolis. I have the white paper, like I said, Brandon. If you Google Bruno Wu, BrunoWo or WU, sorry, Bruno Wu, with Deep Green X, he's the one that it was Anoop and Jeff were working on Cisco's blockchain and Amazon's blockchain, and they didn't have the freedom they wanted, so they left to go start their own chain. And then Bruno Wu purchased their white paper basically for $10 million, and that's Oko. So if you look at Bruno Wu, he's the owner, and he will be launching it in 8 or 9 months, 9 or 10 months, right around there. But Brandon, I'll send you a white paper later, and you can distribute it if you want.
Please.
It's
Yeah, I'll post it in Success Finder for everyone to have access to.
Yep. They're not doing a raise. Bruno's a multi-billionaire. He's just funding it. I already tried to get in. So they brought me on as an advisor, but I don't have money in. But that could change. So if anybody's interested, I'll get the white paper over and talk to you guys Inner Circle on Wednesday, and I'm sure I'll drop on whenever Brandon asks me to.
Awesome. Fantastic.
Cool.
Well, Nick, again, we're grateful for having you here and sharing your insights with us. I just want to reiterate one more time for everyone here, like how unique this is to have this kind of an opportunity to connect with people of this caliber, and the network that he's connected with as well. So I'll post the replay when it becomes available, probably early next week or so. I'll make that available for everyone. Otherwise, hey, have a fantastic weekend, everybody. Thanks for joining us, and we'll see you again real soon.